Hello, I'm Brent Wilsey, and with me is Chase Wilsey. We're from Wilsey Asset Management, and welcome to today's Smart Investing Daily Briefing. Well, yesterday evening there was some big news that came out about Tesla buying SolarCity for $2.8 billion in an all-stock deal. Now, this is kind of amazing. The street did not like this today. The stock was down more than 10%, down about $23, and now Tesla's back under $200 a share. Well, let's compare the companies to see what's actually going on here. So first, going to look at SolarCity. We see last year their cash flow was a negative $800 million, and their debt is $3.2 billion, which is an increase of $1.4 billion from last year. So they're increasing their debt. And also, you have to understand what's going on here. They're going to be issuing shares to buy SolarCity, so there's going to be more shares. That's going to dilute the losses. And while it sounds good that their losses will be less, it's going to hurt the earnings per share when it's positive going forward, that they're not going to have these big earnings. So it's really going to hurt the stock going forward here.
Yeah, exactly. And don't be fooled when they report their next earnings, because you might see EPS up 100% and net income may still be down again because of that dilution.
And it's still a loss, though.
Yes, very important. You have to understand that. And then looking at Tesla's numbers, last year cash flow from operations about negative $546 million. Not a good sign. I don't know how they can acquire a company with negative cash flow, plus this heavy debt burn of $3.1 billion. That was an increase of $600 million over last year.
And I just add these two together, over $6 billion in debt they're going to have.
But their debt to equity is going to be outrageous, and I don't know how they're going to be able to have enough cash if they continue to burn through it this quickly.
Maybe they'll issue more shares.
Maybe, and that does bring up a good point here. Did Elon Musk know about the SolarCity deal before the $2 billion offering that happened, what was that, last month? Mm-hmm. And I do want to point out as well, Elon Musk sold some of his own personal shares during that same time period. So if he knew something was going on with SolarCity, and I'm sure he did, he didn't just wake up today and say, oh, let's buy SolarCity. There's something fishy in the water, and I do want to point out as well, Elon Musk was a founder of Tesla and SolarCity, and is currently on the board of SolarCity. So a lot of stuff going on.
Sound right there. I don't know. I know Elon Musk is a smart guy, but there's a lot of smart guys on Wall Street that end up in trouble by doing some crazy things. So we'll leave it at that. We'll just provide the information for you if you own SolarCity or Tesla. Let's talk about our company for the day. We're going to talk about is Dave & Buster's. I like the symbol play. The current price is $46 a share. The high $48.79, the low $29.54. They've done pretty well over the last few years here. But let's look at the numbers, see if it is a good buy. Sales doing nicely, up 17%. Earnings per share increased by 509%. Gotta love that number, but you got a question as well. How to increase sales 17% and earnings at 500%? Something going on there. Price tangible book is a 66. Intangible assets, so 351 million, and the equity is 381 million. So a lot of intangible assets that could be written down, hurting the equity.
Yeah, there's not a lot of solid equity is what we like to say, and their balance sheet on top of the intangible assets is quite a worry. As you can see here, their current ratio, 0.49. That means they have less than half the current assets of current liabilities. Quick ratio, even more frightening. Quick ratio excludes inventory, is 0.38. And debt to equity here, 78.6%, an okay number, but I do want to point out, if they have to write down some of these intangibles, their equity will decrease, thus increasing their total debt to equity. So balance sheet appears to be very weak for the company, and also going forward to January 2018, estimated earnings per share on a GAAP basis are $2.28, giving us a target sell price of $37.62. So I love to play the games at Dave & Buster's. Definitely would not be playing with this stock.
Well, we apologize for a little bit longer today, but we really want to have you understand the Tesla, the SolarCity situation. But I do want to ask you if you're happy with the current returns on your portfolio, your money. Maybe you're just not happy with the current advisor, and you're thinking, gee, maybe I should do something else. Maybe it's time to call Wilsey Asset Management. We've been managing money successfully for over 30 years now.
I want to call and have a conversation about how we do things at Wilsey Asset Management. Our phone number here is 858-546-4306. And if you missed any Smart Investing daily briefings, please go to our website, smartinvesting2000.com.